Hey guys, welcome to FX Chronicles. This is Azam, and in today's video, I'm going to go over risk management once again and how to enter trades using the risk management methods that I teach you. As you guys realize, I spend more and more time just talking about risk management because the fact is that no matter what kind of trading you're doing, managing your trades, managing your risk is at the core of success. Because the fact is, whether you like it or not, you're going to have losing trades, no matter how good of a trader you are. But what matters more is, how much are you losing per trade? So, without further ado, let's get started. And before I do, once again, quickly on the disclaimer, that this is all just educational purposes. I'm not a registered financial advisor, so just take this information at face value. That's all. Thanks. Okay, so I just want to show you guys, a lot of Forex traders are starting off with small accounts. So this is to show you guys what happens as the worst case scenario if you just stick to your rules. Let's just say you start off with a $2,000 account and you follow the rules that you're going to risk only 2% of your account value on any given trade. That means your loss at most would be $40, okay? So this analysis is going to show you right now what would happen if you have 10 consecutive losses when you start. And so you see, you start off at 2000, you go down to 1960, and after 10 bad trades in a row, your account would be at 1667.5. That's a loss of $332 or 16%, 16.6% loss on your account. I mean, that looks tough. You know, that's a couple of weeks of losses in a row, and you know, you're down by 16%. But still, it is something that you can always come back from. It's always something, because if you, let's just say, the next 4 trades you take, and on each one of them you have a 2% success or twice as much success as you're making money, so you're making 4% return on each of those trades, you'll break even right away. It's not that difficult. It happens. But what I want you to focus on is that having minimal risk on each one of them and being consistent with that. That even though if you have a long term, you have a long run of just failures, you'll still be able to recoup to an extent. Now let me just change the numbers a bit. Here, let me just bring this around. You have the $2,000 account, but instead of risking 2%, you're risking 5% per trade. And people do this because once they start to run into a losing streak, they want to make more money, and so they risk more. Sure, sometimes it works out, but most times it doesn't. What would happen if you're risking 5% per trade on the $2,000 account, and if you have 10 consecutive losses? There. Your account would be down to $1,260.50. And that's a 37% loss on account value. That's a lot more difficult to recoup than just losing 16.6%. And that's what I want to kind of focus on, is when whether you're a new trader or you're an experienced veteran trader, just focus on how much do you risk per trade, because it's a numbers game. It's like shooting in basketball, because you're not going to make every shot, but you will make most of your shots just with time. And trading is not that different. Well, it is slightly, but I hope you understand the analogy. That you're going to take a lot of shots, and that doesn't mean you have to try to hit home run on each one of your shots. And that's why risking 2%, or even heck, let's just make it 1%, and that'll be more conservative. See, you only lose $170. You can easily make that versus losing 5% of your account. It's imperative that you stick to a smaller number. It's gonna look really frustrating that it's a long-term gains and success, and yes, it is. You're not gonna become a multi-millionaire, billionaire overnight. There are some, in fact, I don't know any case where I can tell in Forex that someone's become an overnight billionaire or a multi-millionaire. But yes, over a couple of years, few years, you can have a very, very comfortable living, and all you'll be doing is just risking 1 to 2% per trade. That's what you want to go in with the mindset. When you keep that kind of mindset where you are comfortable with losing 1% or 2% per trade, even if you have a bad streak, you'll still be fine. I mean, sure, you'll get a little frustrated emotionally, which is normal, but versus losing 5% on every trade for 10 trades in a row, where you can literally be devastated because your account has been hurt so much. So that's the key. It's really important to focus on risk management and stick to a smaller number. Trust me, you're not gambling here. You're trading, and it's a skill set, and it takes time to develop. But the most important aspect of it is managing your risk. Okay, enough about risk management now. Let's go on to how to enter trades. But before we do that, we're going to touch on risk management a little bit more. So this is babypips.com, and we're using their Forex calculator for position size. A lot of people ask me, how am I supposed to position my trade? How much, what does these things mean? What does the lot means, or what does the volume mean? So here I'm going to show you how it breaks it down for you. And I love this calculator, especially for newbies. It really helps them out a lot. So let's just say you have a $2,000 account and you're risking 2% per trade. So that's $40 again. And let's just say you are subscribed to my trade alerts. And let's just say here that, for example, we're taking the Euro USD trade and the stop loss is 50 pips. So what does that mean in terms? When you click calculate, it tells you that you're risking $40, and based on a $2,000 account with 50 pips stop loss, this is the maximum position size you can have, which is 8,000 units or 8 micro lots. How does that work in action? Let's just say we come here, we put on an entry trade. I am expecting to get in at 1.14, and the stop is going to be 1.1350, which is 50 pips. And those of you that can see that, here you go, it's 50 pips. And I have a $2,000 account, and it says that I can have up to 8,000 units. So what does that mean? Amount in K is the volume. That means amount in thousands. So right now I have selected default 10,000 units, but I can only have 8,000 units, else I'll be going above my risk management. And here it is, 8,000 units with 80 cents per pip, and I will still be able to risk about $40 a pip, or for $40 on the trade and on the $2,000 account. And voila. By the way, this is FXCM trading station, but regardless of what trading station you use, it's the same concept. So the key to getting these trade alerts or trade entries, it's really important to understand how much you're risking, and a lot of people use these. These position size calculators are very useful for those who might don't want to do the numbers in their head and round it off. This is a great tool, and I highly recommend all of you using it, especially new traders. It's just going to make it much easier for you to buy and sell trades. It's really simple. Forex, I think people get a little confused because of the terminology. Yes, the terminology takes a little while getting used to it, at most 3 days, but you'll be fine with it. It's not that difficult versus stocks. And once you start to use a calculator like this one, which is just, it's invaluable as a resource, you'll be great. You'll do just fine. So that's all that I have to add to this video. Once again, the importance is on managing your risk, because if you're comfortable with losing a certain amount of money on any given trade, then in the long run you'll be just fine, because you're willing to give enough space to your trades to make it work. Yeah, I guess that'll be all for today. Once again, guys, I really appreciate all the comments that I get from you guys, all the messages. If you're new to trading Forex, I think I've already provided all the videos for free that should help you get started easily on the demo account. And if you're looking to really supercharge your education and really get going, start trading and being successful at it from within a few days, then I urge you to join my course, which is only for $75, one-time fee. And this is the course that I can easily be selling for $1,000. But I've said it before that rather than doing that, I'd rather have more people join it and learn from it, and just be able to share that knowledge, because that's the purpose of life, is that you want to be able to share valuable information with others and help them succeed. So once you take that course, I assure you, you will never have to take another course when it comes to Forex, because the course itself includes all my private video content that's going to teach you how I strategize myself, how I analyze the trades. You get access for life to our members group on WhatsApp. So regardless of what happens, you will have not just me, but a whole bunch of other very talented traders who will be helping you throughout life. You get access to me via Skype, phone, email, WhatsApp, and you get lifetime access to all the videos, old and new. So if there's ever a new strategy coming out, you don't have to spend money for it to learn, because you know you're going to learn it from here. And as you can see, I'm not using any indicators because I really don't believe in using indicators. Trading is supposed to be simple in all forms of it, and you don't need indicators to be successful in trading. So that's what we teach you. You don't need to have like a really messy chart. You will learn all the things that make trading successful and how to monitor your trades properly and just be successful at it. $75 is really nothing for the value that you're getting with our course. So once again, guys, this is Azam with FX Chronicles. Thank you so much for all your time. Have a great trading week ahead of you. May you all make tons and tons of pips. And if you have any questions, feel free to contact me. Thank you once again. Have a wonderful week. Goodbye.